Okay, class. Here we are back again. Okay, so we've recorded all of these transactions or analyzed their increase and decreasing effect on the accounting equation. Okay. Now, what we do is we're going to tally up the columns to see what the balances are in each of our accounts. So what you want to do is add each column up. Okay, or consider whether it's an increase and decrease. So you're basically accumulating what's happened in each column. Now, I know your book has you running subtotals after each transaction, and that's fine. I just went ahead and entered all of the transactions without doing that, just to speed the discussion along. But if you're required to do it in the homework, go ahead and make subtotals after each transaction. Then you would have your total at the end. So basically, I'm just adding up. I'm using Excel to do it, but you could add it up with your calculator, each column. Okay, and I'll have a balance in each account, and I can basically do that for all of my columns. Okay, so each account has a balance that takes into consideration the transactions that occurred in that particular account. Now, what we want to do before we move forward is we want to make sure the cumulative effect of the transactions on the asset side of the account equal the cumulative effect of the transactions on the liability and equity side of the account. So basically what I'm going to do is I'm going to total up all of my asset accounts. So I'm summing up all of my asset accounts, and I'm going to compare that to the sum of all of my liability and equity accounts. Okay. Now you can see my accounting equation is true. My total assets are equal to my total liabilities plus equity. If they were not, I wouldn't move further from here. I would go back and figure out what went wrong. Okay. I'll be back in a minute and we'll make financial statements out of this stuff.